Hey everyone, Nvidia's stock price is down over 20% off its high in the last month. So investors are curious if this is a buying opportunity or if Nvidia's stock price is going to fall further from here. So in this video, I'll discuss why Nvidia's stock price is falling, and I'll also let you know if I think this is a buying opportunity or if I think it's time for investors to sell Nvidia stock. So let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so you'll notice here I have a group of four investments, Nvidia stock being one of them, and it's down over 20%. But if you look at the broader semiconductor ETF, it's down over 22% in the last month. So it's not just Nvidia's stock price that's falling. And the S&P 500 ETF is down over 5%, 5.68% to be precise, and the NASDAQ is down over 3%. So it's a broader market sell-off. Nvidia is not the only thing that's selling off specifically. Now, if I was to share with you the primary customers of Nvidia's products, right now, those are Amazon, Meta Platforms, Alphabet, and Microsoft. These are the hyperscalers that are building out data centers capable of producing AI, and they are the ones primarily spending on Nvidia's GPUs. Now, I can include here Tesla's buying Nvidia's GPUs, Oracle, and many other companies that are buying Nvidia GPUs, but the four largest are the ones I've listed here. And they are down in the last month as well. 9.6% Meta Platforms, Amazon's down 16%, Microsoft and Alphabet down 12% respectively. And the reason why this is bad news for Nvidia is because if their primary customers are seeing their stock valuations fall, because they've been telling their investors that they're going to spend tens of billions of dollars building out their AI. But if these four hyperscalers see their stock price fall as a result of their investments in AI, they may then pause their plans to spend on building AI. Remember a couple of years ago when Meta Platforms announced that it was going to invest in the metaverse? And after their pointing out that investment to their investors, the stock price fell significantly. And then Meta Platforms went back to investors and said, okay, we get it. You don't like that we're spending money on the metaverse, and so we'll decrease our investments in the metaverse. And then its stock price recovered. So there's a similar risk here with artificial intelligence where these companies, Amazon, Meta, Alphabet, and Microsoft, have been investing aggressively in AI. And if their investors come back to them and say, we don't like it, and the way they will do that is by selling their share price, and then the stock price will fall. And then these four large companies could then have to go back to their investors and say, look, I know we said we're going to spend tens of billions of dollars on Nvidia's GPUs and building out data centers, but we understand that it's too much for the investing community, and so we're going to reduce those investments in AI. And if they do that, that would be bad news for Nvidia, because then that's lower revenue growth and lower profitability for Nvidia and Nvidia's GPUs. So that's the risk that's been creeping up in the last month. And that's the risk that investors are responding to right now with Nvidia, is that the investors of the large customers of Nvidia are pressuring them on these AI investments. They're not as patient as they were 6 months ago, where they were willing to let these companies invest in AI. But now they're kind of asking, how are you going to generate revenue from these investments? How are these investments going to generate revenue and profits for us? And they want to see more tangible evidence of that. And so that could put more pressure on these four large companies, which could then pressure Nvidia because these four large companies won't purchase from Nvidia all that much. Now, so far, I'm not seeing any indication of that happening. If you look at the earnings per share expected for Nvidia in the current year and next year, and you look at the last 30 days, they've actually increased the earnings per share expectations. 30 days ago, analysts on Wall Street were expecting Nvidia to deliver $2.52 in EPS. They now expect Nvidia to deliver $2.72 in EPS in their current fiscal year. For the next fiscal year, those earnings per share expectations are up as well in the last 30 days. $3.39 was the expectations before, and now it's $3.74. So the EPS expectations have not been decreased over the last 30 days for Nvidia. So far, what has driven the stock price down is the risk that they could potentially be decreased. But those haven't shown up yet in the EPS expectations. Still, the risk increasing is a valid reason for a stock price to fall, right? Investors that are putting up their money have an equation, have a balance here. It's risk versus return. And if your risk is increasing, then the price you're willing to pay should decrease. It should decrease because all else being equal, would you rather have a 10% return on your money guaranteed, or would you rather have a 10% return on your money with risk where it's uncertain? Maybe you'll get 10%, maybe you'll get 12%, maybe you'll get 8%, maybe you'll get 6%, maybe you'll get -5%. With the added risk from your investment, your willingness to invest should decrease because all of us would prefer a rate of return with less risk. And if your risk is increasing, the price you're willing to pay should decrease. And that's what's happening with Nvidia stock right now. That risk is increasing. And the reason that risk is increasing is because the pressure on its largest customers are increasing. And so as that pressure increases on its largest customers, maybe those large customers come back to Nvidia and say, you know what, I know we were telling you we were going to order this many of your products, but actually we're going to order this many instead. We're going to order less instead. So that's the risk with Nvidia stock. And that's the reason why Nvidia stock price is falling and the pressure on Nvidia stock. Now, to answer the question, is this a buying opportunity or should you sell Nvidia stock as a result of this risk? I would say the former. I would say this is a buying opportunity. Sure, the risk increased for Nvidia stock, but also the price decreased by 20%. And I don't think the added risk justifies the 20% stock price decrease. The stock is now trading at a forward price to earnings of 28.8, which I think is a cheap valuation for Nvidia, given its earnings prospects for this year, next year, and also if we look out for the next 5 years, the expectations are that Nvidia will increase its earnings per share by 46% per year over the next 5 years. So that's a robust rate of earnings growth to pay for a company trading at just 28. In fact, I would be willing to pay a forward price to earnings closer to 35 for Nvidia. 28 is on the lower end of where I'm willing to purchase Nvidia stock. So all in all, I do think this dip in Nvidia's share price is a buying opportunity for long-term investors, with the caveat that you have to understand the stock is now riskier because of those factors I mentioned. So you do have that added risk. But I think the return justifies the risk for Nvidia stock. Of course, this is for informational purposes only, and I recommend you do your own due diligence. I have dozens of videos on Nvidia stock on my channel. I recommend watching many of those before coming to a conclusion on purchasing Nvidia stock. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.